What's up, everyone? Welcome back to the Outlier podcast. I have a new friend with us. This is actually the first time I'm having the opportunity to meet Options with Davis, but welcome to the podcast, man. Thanks for coming to hang out for a little bit.
Thanks for having me, Eric. Very happy to be here.
Yeah, absolutely cool. And I'm really excited to talk to you. This is kind of one of the beautiful components of technology is the fact that right now you're over in Singapore, I'm here in California, and we're able to have a pretty low latency conversation, which is really sick. But yeah, man, so typically in the beginning, like I was telling you right before we started, I like to just get a bit of background, right? So specifically, I would love to hear a little bit about how you got interested in trading. And then the other piece to that is how you got specifically interested in trading options, because that's an uncommon offshoot for most of us. So I thought we'd start there.
Sure. So I started trading sometime back in 2005, 2006. I was 24. I was still in my university days. And I remember going to the bookstore one day and I came across this book about financial freedom, right? So I was very interested. So I bought the book. And one of the vehicles that they mentioned is to use trading, right? So I got very interested in trading and started to get, as many books as I can. I remember attending this seminar whereby it was co-hosted by a broker and some education company. And this education company, I think, was selling some kind of a software where there was this trading signal, buy and sell, like a bot kind of thing. So I remember he was calling out to the audience to just shout out some stocks, right? So the audience was shouting out the stocks, and then he would show the stock on his screen and show the buy-sell signal. And it was like almost every stock that the audience called out, it was a winner. So I kind of thought that, I had to get this bot. So that was my first introduction to this. So I remember it was pretty expensive, right? Especially I was a university student. So I had to take up, part-time jobs, and I had to work extra shifts just so that I could, make enough to afford that system and also fund my first account. So I remember funding my first account and then trading using the system. And of course, it always works well during the presentation, but never in real life, right? So what I found out later on is that this system kind of repaints, right? So I decided that, I don't think this is the way that it should be. So I started to dive more into trading, reading other books, and I came across this book on options trading, and I got very interested. And also at
What
that
was the
point of
book?
time, I had a few books, but the one that really got me interested was Get Rich with Options. I think it was by Lee Lowell. Yeah, and yeah, and because I was doing finance, right, it kind of interested me, right, especially with the probabilities and numbers. So I started to open an account with Thinkorswim, and back then they weren't bought over by TD Ameritrade yet, right? And yeah, so I funded that account as well. And I remember I was asking for lower commissions because back then it was much more expensive, right? They had this ticket fee at the start, and then per leg is cheaper. So I remember I had to ask to lower the commission, and it was one of the founders of Thinkorswim back then that actually replied to my email. I can't remember, was it Tom Sosnoff or was it Scott Sheridan? One of them.
Oh, I see.
Right?
You didn't know which one. Yeah.
Yeah. So he told me that he would be willing to give me a commission per leg. So I was like very happy about that, very appreciative because it made things so much cheaper. So I started to get into options trading, and I went to all the webinars that they have, or many of the webinars. So for me, it was past midnight my time. So I would stay up late just to attend their webinars, download their training, because options can be quite complex, right? Definitely much more than outright trading. So I started to plan my very first trade. I remember my very first trade was a bull put spread on Google, and Google was back then was about $400-500, right? So the first trade was a winner. I got hooked, and I started to keep trading. And at the point of time, I would say that I'm doing pretty okay for a university student. I was making maybe 1,000 or two, each month. And I thought that, hey, this is something that I want to do, right? I'm going to graduate, not get a job, just do options, right? But of course, things never turn out the way you want it to, because I placed a trade that pretty much blew up my account, right? So I still remember it was on OEX, and it was the subprime crisis. So the market had came down quite a bit. It crashed, and I put on this trade where the construct was about 99%, right, win rate. And I thought, I mean, 99% to make a few $100 in a few days. What could happen? It's pretty much a done deal. But as a Murphy's law would have it, anything that can go wrong will go wrong at the worst possible time. So that's kind of what happened, right? The problem with that trade is that I pretty much risked the whole account because I didn't think that it was
Right.
possible. I kind of got overconfident at that point. So I remember after I placed the trade, I think it was the next day or so, the news came out that the subprime crisis had spilled over to the Europe side. And I remember looking at the screen, the market continued to tank even further, way past my construct, and I was losing a lot of money. And I was like, I didn't accept the risk at the point of time, which is a very big mistake. So I panicked and I just closed out my trade earlier than I should, and thinking I could save some money. But the ironic thing was that if I held to expiration, it would have expired worthless. But it could easily work out the other way as well, where could have blown out the whole account. So I realized that I didn't know as much about options as I thought I did. Definitely couldn't do this full time after I graduate. So that's when I started to dive more about risk management, learn a little bit more, and yeah, that's pretty much how I got started in options.
Yeah, man. I laugh a lot because the story about your high probability trade that you put on an OEX, it's essentially the same thing I did in Rut. I had a
Oh,
really wide iron condor and I started trading a little bit after you actually. I started trading in 2007, but that was the largest percent drawdown on my account. And what made your story hit even closer to home is exactly like you. I exited the trade. It was like a 30+% drawdown on the account, which is the biggest drawdown I've ever had, which better than some people, but still like that's a lot of money to just evaporate. And I closed it and I was like, okay, got to get it together. And then, dude, it's the same thing. It was a short term trade. And sure as shit, if I just left it alone, it would have been what I'm telling you, dude. So it's so funny to hear. It's like literally the same story. We had the same exact experience, which then leads me to be super eager to understand the way that you reacted to that experience. So after you had your oh shit moment, this is not
mhm.
going as I thought it might. How did you react to that? And then what did you do to navigate around it?
Yeah, so I realized that risk management was a very big part, and that I had to really understand more about trading. That's what I thought. So the next thing I did was after I graduated, I wanted to get a job as a trader. That's what I thought that you know is the best way for me to learn about it. So I managed to get a job at a proprietary trading firm,
Mhm.
and from there I learned even more about risk management. So from there, that kind of, I would say, really gave me quite an eye opener as to how professional traders really trade. Yeah, so pretty much that's it. After that, I went to the prop firm, did that for a while, and then from there, I would say the risk management part, I kind of pretty much um, kind of was able to navigate the market more safely compared to before, because it was the prop firm was very uh, what is the word? Very sharp on risk or very hard on risk, right? If you had a loss limit for that day, you had to actually stop trading, close out all your position and stop for the day, right? And the person next to you, he has to also know that if you have the loss limit, he has to make sure that you stop trading for the day. And there was this um, one of the the thing that happened at the prop firm was the very first day where I was there. I would say that's the most momentous occasion, so to speak, whereby it's not because it was the first day there, but rather the senior trader there actually got fired on the very first day I was there. And the senior trader had been there for quite a while, and he was actually profitable. But he was fired because he made a very big mistake, whereby he let a losing position go way past what it should be. So I remember that day, he was stuck in this position. Then we didn't know exactly what happened, but the boss had all these screens in his room where he knows every trader's P&L. So what happened that day, he came out of his room and he was just standing there and staring at one trader at the end. And it's very rare that the boss actually comes out of his room, right? So we knew something was not right. So he was staring there and then he just shouted over to the senior trader and just said something like, when are you going to get out? So the senior trader was just saying, soon. He just said the word soon. So the boss was saying, okay, you said soon. The boss went back to his room, and a few minutes later, the boss came out again, and he was a very big guy, big towering guy. So you know you don't want to mess with him. And he started to hurl vulgarities at the guy and told him to get out of his seat. Get out of his seat, and he sat in his place and exited his position for him. So you know your job as a trader is done if the boss have to sit at your seat, exit your position for you. And then the boss told him to get out that day. So there he was that day. I was a bit shocked because he is a profitable trader. He had been there for many years, but because of one mistake, right, he didn't adhere to his loss for that day. He got fired. And after that, there was even this talks whereby the boss wanted to implement some sort of system whereby if you hit the loss limit for the day, there'll be sirens that goes off so that it will alert people beside you. And those people beside him have to make sure that he stops trading for the day.
Right.
But that's pretty much, how the risk is very important for the firm.
Yeah, well, I think that that's really cool too, because it highlights obviously a very thoughtful approach to learn about trading, right? Because you're like, this is what I want to do. I obviously need to learn more, because a lot of people I find that get into trading, they'll make a mistake like that, and then they'll just somehow think it'll be different in the future. And I think people sometimes forget that if you trade like that, where you personally have to make every single mistake, sooner or later, you're going to blow up. Like, there's only so many mistakes that you can get your way through. But that experience at the prop firm is really interesting to me. I have two follow-ons. The first one is based on that happening your very first day. What was your impression? What were you thinking as you were sitting in your desk watching this thing happen?
Yeah, that I better not have the same thing happen to me, otherwise I'm gonna get fired. But the funny thing was that later on, after I got my account, so when we started off, we won't have our own account, right? We have to trade the company's account. We have to show and prove that we are consistent before we get the account. So after I got my account, I think it was only just the beginning few months, I got into a very similar position as that senior trader. And straight away, I remember, I better, stop trading for the day. So once I had the loss limit hit for the day, I quickly closed my trade. So one thing also is that my mentor, so every junior trader there always have a senior trader kind of like overlooking them. So my mentor was this senior trader who was very good at risk as well. So I learned quite a bit from him. So once this loss limit hit for me, I remember I had to close up my trade immediately. And then I went straight to the boss's room. Instead of waiting for him to come to me, I went to him. So I went to him and then I told him that, boss, I hit the loss limit for the day, so I'm here. So I remember the boss was saying something to me like, I'm glad you came. I was actually wondering when you would come to me. So, it was a sigh of relief because he was waiting. So
Right.
then he asked me, could you have done anything? Could you have done it better? So I thought to myself, like, that is a question. I'm not sure, is it a test or, to see my honesty? So I thought to myself, no point, smoking him. So I told him that, yes, I could have done better if I could have exited that market. But instead, I didn't want to exit the market. I wanted to queue in order to get a lesser loss. But I had a plan, right? If it didn't, take me out at my limit order, I would just cut. So it went, further south. So I cut it. And I told my boss that, I didn't want to, I could have cut off earlier, but I didn't because I didn't want to lose that much. But with that
Mhm.
said, I did try to cut off after that. So the boss said, I'm glad you make that decision because I'm still waiting for the other traders to come in. So he showed me on his screen that there were other people in the same position. So I didn't feel that bad after that. So then he went on to say that, you will have days like this and that managing it like this right now will help you in the long term. And then he proceeded to say, stop trading for the day, but you can watch a movie. So in the prop firm, you have one screen that you could, you don't have to trade, you can just relax. So yeah, pretty much that's how I kind of handled the risk after that.
Yeah, that's massive, and what a great infrastructure too, because that really promotes like just a great environment to learn in. That you weren't punished for going to him; you were essentially rewarded. And I think that that gives you like massive positive reinforcement to make hard decisions. It's like a big thing that we do in the military as well. Is in the military, you make tons of really difficult decisions, and a lot of them they all have bad outcomes. It's just like, which is the better bout outcome for me? And if you have really good leadership that will help you acknowledge the fact that, yeah, like this was a bad outcome, it was going to be bad, but you made the right decision with what you had, like that's massively, massively influential. I could see how positive that could be on your longer term trading career. How long did you stay at the prop firm for? And what was some of the bigger pieces that you took away beyond risk management while you were there?
I was there about, I had a total about 4 years or so.
Okay.
And the biggest pieces, um, I would say, would be really only the incidents about managing risk, right?
Mm,
Because the way that we trade is pretty straightforward, and that the profits will come, right? The profits are always smaller than the losses, so the losses will always be something that you need to know how to manage, and also being very honest with yourself. That's one thing I found out, because a lot of time people might you know tell us some certain stories to make themselves feel better. So one of the other thing that happened at the prop firm was there was another trader that joined around the same time as me. What happened was that he also got fired, but for another reason, because he had a losing stock that he had a very big loss on. But on his screen, we would have all these stocks where it's shown on our screen. But the boss one day came out of his room at the end of the trading day and went over to his screen, and he was not at his screen. So he took a look at his screen and couldn't find the stock that was losing a lot of money, because on his end, on his risk monitor, he saw that this trader had a huge loss on a particular stock. And for us, we usually put all the stock on the screen so the boss can actually see it. But
sure.
on his screen, the stock was missing. So he was wondering what's happening. So he's asking the tech team, is there something wrong with this risk monitor? Only later on to find out that this trader actually removed the stock from the screen to show that everything is nice. And because of that, the boss fired him, because
Yeah.
it was like painting
Lack,
a picture like
yeah.
not really being honest with himself. So
Lack of
from
trust.
that day on, yeah, I kind of felt that the first thing is always to be really honest and
Yep.
risk management.
Yeah, yeah, that makes a lot of sense. It's man, it's so funny too because you think about like what a juvenile move on that person's behalf, as
Yeah.
if the dude can't see it in the office, right? Like the dude can see the accounts, so it's just yeah, that's I could totally see why he would fire him. Um, so you were prop firm trader for 4 years, and when you made the transition after that, what was next?
Yeah. So after that, I started to do trading on my own.
Okay,
Pretty much, yeah, all the way on my own. I did.
got it.
Yeah, the transition was quite tough, I would say, in a sense, because starting off, you were trading with the firm's money, right? And even though it was a loss, it was still the loss of the firm. But when you
Right.
start to trade on your own, right, the loss affects you much, much, much more, especially
Yep.
psychologically. So during that time, although I've built up quite a sizable capital back then, also because of the profits I made from the firm, but I also went to do some, like a side hustle kind of thing. So at least I still have, I'm not fully reliant on just options trading. But yeah, after that, I did it for a while. I grew my confidence, my account size gradually grew. Yeah.
Talk to me
And that's how.
about talk to me about like the tools that you took from prop trading into your own trading.
Yeah. So basically, one thing I found about prop trading when I was there is that nobody really uses technical analysis. Yeah, there was no talk about head and shoulders pattern, no candlestick, no. It's all about looking at price levels.
Mhm.
So that's how I kind of took my approach in options trading, whereby instead of looking at all this technical analysis stuff, more towards price levels, and then just using the probabilities to play out to trade. And the other thing is also looking at risk first. So a lot of times, what I found out, especially through some of my YouTube audience where they email me, a lot of times they focus on what they want to make first, right? The premium to receive, and they decide their position size based on how much they want to make,
Of
and
course.
they don't really look at the risk. So I would take the opposite approach. I would look at risk first rather than see how much you make.
Yeah.
Yeah.
Yeah. That's absolutely awesome. It's funny too because that's just so common for all of us. I mean, think about even, one of the first books you read that got you interested in options trading, right? Get Rich with
Yeah.
Options or Trading Options, right? It's like obviously we're focusing on that part. Um, that that's huge, I think. So focusing on the risk side is a big part. Talk to me in terms of the specific strategies you would use from prop trading into personal trading and like the specific products. So obviously you're analyzing more so just through price levels and you're using the options chains themselves to decipher probabilities and things like that. Talk to me about like strategies and products.
Yeah, so the strategies that I'm trading in my portfolio are a number of strategies, right? I would say I would group them between growth and income.
Mhm.
So growth strategies are more like, leaps, slightly more longer term. I would even categorize a wheel strategy also, growth plus income, because when I get a sign on the stock, I actually hold them rather than immediately sell the cover call, right? So I'll hold them until it goes up before I sell the cover call. And then for the income side, I would have strategies like strangles, jade lizards, ratio spreads, and butterflies. Yep.
Got it. And so talk to me about how you split your portfolio between those two.
Yep. So generally, it's more towards growth, just because of the size of the underlyings that I'm trading. So they're much more expensive. So in order for you to get a sign, you do need more capital. So I put much more towards there, around 60+%, and then to the income side, the remainder.
Got it. And when you're trading stuff like the wheel, for example, I have a bunch of material because I trade a slight variant of it. It's called a covered strangle. So it's similar in context, but a slightly different methodology. Talk to me about the way that you run the wheel. Specifically, you were talking about one part that I want to hone in on, which was that when you take assignment, that you obviously try to wait for it to show a profit before you either sell calls or take your exit. How do you manage something where you're trading the wheel in, you sell your short put, you get assigned, and then the underlying just continues down?
Sure. So this actually happened back in the COVID as well as 2022. So first of all, when I choose the underlyings for the wheel strategy, for me, I tend to choose what I think are fundamentally sound companies. That means I
Okay.
do not mind actually holding them for the long term. So these are companies where they are profitable, and at least they have been around for a number of years, right? I want to see that they have at least survived some of the major crashes, like for example, financial crisis, 2007, 2008, and even pandemic. So these are the stocks that I generally tend to choose. And then I will take a look at their valuation, right? So there are many sites for this, right? So I'll just go to the sites, and out of the valuations, I'll just kind of pick the most conservative one, and that's where I'll start to plan getting into the wheel. So the way I trade the wheel is slightly maybe different than the conventional way of trading wheel, whereby I would have an allocation to the stock. Like if I want to allocate to this stock, maybe I can put on, say, based on my size, I can put on 4 cash put, for example. But instead of going all 4 cash put at one level, what I'll do is that I will stagger in the entries. So I'll enter them in tranches. So I'll enter them below the valuation, and then I'll split them up into the 4 different. So this way, as the market goes down, right, at least I won't all be hit all at once, right? So if I had hit all at once, then I'll be holding on to the stock for a long time, because I may not even be able to sell a covered call because it'll be way below entry price. So instead, I'll stagger them down. So if the market comes down, I will get to the next cash put, uh, and then so on and so forth. And then finally, when it goes back up, I would sell the covered call usually above where the valuation line is. So let's say if I think the valuation is at a certain level, I will wait until it goes above that, especially I had a sign on quite a number below that. So that would have quite a bit of a capital gain on the way up. And then I would stagger my covered call on the way up as well.
So then how do you navigate the opportunity cost associated with that kind of strategy where the COVID market was really accommodating? It was like a 3-day bear market before we started that crazy rally out. So if you have a stock, you staggered your short puts, you start
Yep.
getting hit, you're assigned, you're assigned, you're assigned. So is there a point at which you're like, okay, I've been in this thing for 6 months and I'm still super far underwater? Do you manage the loss by time or by other price levels, or is it literally just I still think this is a fundamentally sound company? I don't care how long I have to wait.
Yeah, I take the approach whereby I'm into this for the long term.
Yeah.
So I do not trade it more of a short term, whereby I try to get a covered call at the entry price. I kind of wait until it goes up. So if I have a firm belief in the stock, then I would just wait for it to eventually come back up.
And then is there a condition that would make you not believe in the stock anymore?
Yeah. So that is if some changes happen to the company structure and I'm not very sure of the outcome, then I might just take the loss and exit. But so far, it hasn't. I haven't done anything like that so far. And also, most of the underlyings that I choose tend to be very big cap stocks, in a sense whereby they are kind of widely traded. So it's not like very lower price stocks where it's uncertain or it's not profitable.
Yeah, got it. Because that's always been one of my fascinations with stuff like the wheel, is because I notice a lot of people who like to trade it, they'll essentially run it very similar in that sense where they'll kind of just wait. And then it circles me back then to the original thought of how do you navigate then the opportunity cost of that capital?
Yeah, very good question. So this is something that also I've been thinking about, but basically I will park them into fixed income securities. Right. So what I'll do is that in my own bank, I would put in them into fixed income security first. And when the need arises for me to actually get to the next level, then I will actually transfer it. Now, it may not be that efficient, but recently I've been speaking with some people and they talk about using like money market funds. So
Mhm.
that could be an alternative whereby you park some money in the market money funds. But I do have some in T bills as well. But T bills
Have you,
aren't as liquid because you have to wait until it kind of matures before you can use the funds.
have you tinkered with box spreads?
No, I haven't.
It's exactly what I use. So, are you familiar with the covered strangle?
Yes.
Yeah, okay. So it's essentially almost same process as the wheel. The primary difference is as I'm assigned, I'm typically selling more cash secured puts, and then I
Yep.
almost will always sell the calls at a ratio so that I don't cap my upside potential. But to the same point, and it's actually fascinating talking to you, to be honest, because there's so many parallels. I find this every time I talk to traders that have been trading for a while. It's like we do shit the same way. Like there's small differences, but it's like the same stuff. It's hilarious. But when I'm trading something like the covered strangle, I'll have the same idea. I'll have a certain amount of allocation that's ready to go to it. But any of that
Mhm.
money that's not being used, that's
Yep.
allocated to the trade, I'll put it in a box spread. So it's a way for me to earn a slight premium over the risk-free rate for whatever duration I put it in. And I use something like SPX to run those. So it's
Oh,
also section, well, in the US, section 1256 tax code. So 60/40 long-term, short-term capital gains. There's no early exercise European style option, and you can always exit it early if you have to. But yeah, that just might be something worth, because if you're talking to me about like T bills, money market, you'll
yeah.
make more spread for sure.
That's interesting. So that means if let's say you set aside a certain amount of money for the stock, and
Mhm.
if you have unused portion, you use that unused buying power to put into this covered strangle on the SPX. Is that correct?
The box spread, yeah.
Ah, okay. And what if there's a loss? Wouldn't that eat into the amount that you need to put into the
It's so if you put the trade on as you should, it's impossible for it to be a loss.
for a cover strangle?
No,
Ah,
for the
okay.
box spread, for the box spread. So the covered strangle will have whatever variance it has. Again, you can
Oh,
essentially,
okay, okay,
yeah, yeah,
okay.
yeah.
Got it.
Yep.
Got it. Got it.
Yeah, because I run box spreads almost all the time with unused capital in the account, just because you earn a slight excess over the risk-free rate. So, for example, right now I'm running one that's giving me 0.71% over the risk-free rate for the corresponding time frame that I'm in. So you're not like out there rolling in money, right? It's not
Yes.
crazy, but that is still almost 3/4 of a point of excess that I get over doing something like short-term T bills or stuff like that.
Yeah, definitely have to look into that. Yeah, I think
Yeah,
that's
for
that's a
sure.
pretty good idea.
Yeah, dude. Well, anytime if you want to set up a call, otherwise, you and I can just bullshit a little bit, but I'd be happy to walk you through what I do with them. I just find them when I'm trading something like the coverage triangle, which is really capital intensive, it's kind of a way for me to triple dip almost so that I can be a little bit leaner. So it sounded like you're working down the same path. That's why I offer that up. When you look across your different strategies, what do you tend to use the most?
You mean place the trades most often, or you mean the allocation amount?
I can't tell you how much I love that clarifying question because I'm not kidding. It's the exact clarifying question I would ask. But the first one would just be the bulk of the capital, which I'm assuming are just the more
Yeah,
capital intensive strategies. But we'll start with
that's
that.
correct.
Yeah,
Correct. Yeah. So the more capital intensive strategies are the lips and the wheel strategies, but the one
yeah,
that I do more often is generally the income one because they're generally a shorter time frame trade. So those cycle much faster. So you take them off and put it on much more often.
got it. And then talk to me then about frequency. Which strategy do you tend to cycle in and out of a lot?
Yeah. So there are two types of style of strategies that I use in terms of income. So one of the type of strategies I will use on cash settle, and I'll kind of hold them towards expiration. So these are trades like the broken wing butterfly, and mainly because they are very slow spreads in a sense. So if you were to exit at 21 DT, like based on what the tasty trade mechanics are, if it gets inside the tent, chances are that the profit will be very minimal because it's a very slow spread. You won't kind of realize the potential of that tent, the profit, until close to expiration. Then the other type will be on the like strangles and jade lizards. These are more towards 45 days around there, and then I'll exit latest at 21 DTE. Right.
Got
Otherwise,
it.
I'll take
So
profit around 50. Yeah.
okay, so you kind of mirror tasty mechanics.
Correct. Mirror
Got it.
tasting mechanics. Yeah.
Got it. Okay. Now, when you first were working in the prop firm, what kind of strategies were they having you use there?
Yeah. So the prop firm I was in, we were only trading equities.
That's what I
So it
figured.
was not on options because I wasn't at least aware of any options prop firm, at least at that point in time in my country. But maybe there were, but there weren't the openings because prop firms are very, the jobs are very sought after. Once it's open there, people will take it up. So we were doing equities. So the style of trading at the prop firm was very market maker style of trading, where we would be on every level, every bid and ask level, and we'll be basically just scalping the spread.
Yeah, got it.
So yeah, so it's very fast in and out kind of strategy. So we are basically managing the queue system, so to speak. So
Yeah.
for example, if I was to queue on the bid, I will be the last position until the people in front of me would get filled. Then it will be my turn. So all we're doing is just managing the queue position, and we will be on all the levels. Right.
Right. Yeah. Which, funny enough, I find it interesting that so many retail traders think when they transition that they'll be able to essentially try to provide markets like that. Can you talk about some of the reasons why you don't do that now and you've migrated over to options?
Yeah. So the way the prop firm traded was actually to set things up is a little bit difficult because firstly, to set up with the broker, you need a very large capital. They are looking at least at least at the point of time, maybe I think about a few million, 1, 2 million to start things up as a startup capital. And the software which we use is actually customized. I'm not saying customized, it's built from scratch by the software team. So the platform which I was at, we had a team of software engineers to do it. And you need to set up the server, at least from what I understood, you need to have the server, just beside the exchange. So the whole setup itself was too expensive for a retail person, one person to do it. Yeah. So you couldn't exactly do it on your own, even though you wanted to. But now I'm not too sure whether it's possible because the other thing we also need is level 3. I'm not too
Mhm.
sure whether level 3 is accessible for retail traders. At least it wasn't back then, whereby you could, level 1 is the inside bid and ask. Level 2 is the other levels. Level 3, you get to see the actual breakdown of the orders on the level. So at least I will know, let's say if an order is about, say, 50,000 shares, I will know whether this 50,000 shares through level 3, is it one person or is it maybe 20 people, right? So with that, we are able to, manage our queue positions much better, our orders better, because if you just see level 2, you're in the blind. You have no idea what's going on, whether it's a spoof or is it, because this style of training, a lot of manipulation, a lot of spoofing. So level 3 really is needed for you to trade this strategy very efficiently.
Yeah, yeah. And then also another add-on for that, talk about like the friction via commissions, like the cost to actually transact, because I
Yeah,
think that's important to highlight.
yeah, that's a very big one as well, because with the prop firm, because of the size which they have, they are able to get, very little commissions, especially in and out, right? But as a retail trader, I don't think you can, at least back then. Now it's all commission free if you trade stocks, right? Trade shares. But back then, it was a very big thing, right? To have
Yeah.
very cheap commissions.
Well, and the other thing on top of that is what I try to remind retail traders now is like it might look like it's free because to your point, there's no cost up front, but your order's being routed via payment for order flow. So your
That's
ability then to rest orders on multiple markets is essentially relegated to who they choose to bundle your order with. So then you kind of get broken off that way. Um, that's fascinating. So when you look at your trading career so far, what's been kind of your average return that you've been able to sustain through your approach?
Yeah, the average roughly is around 20%, right?
Solid.
20 plus percent. So far this year is slightly better, at least as of this point is about 24%, but mainly
Mhm.
because the market has gone up. So because I have, a big portfolio towards a bigger allocation towards more of like the leaps and wheel strategy, whereby, if the market goes up, it tends to do well. So these are the times where it tends to do better.
It's funny to hear you say that because my compound annual growth rate from when I started is very similar to that. It's slightly higher end of the 20s, but that's mostly because it got skewed from last year. I had my first like really strong year last year, but before that it was always low 20s. So I'm realizing that essentially you're my Singaporean brother, and I think essentially we just do shit the same.
And I did the military as well. So
Yeah, see, dude, I'm telling you, I could just tell. I just the vibe check is there, and based on the way that you talk about this stuff. Um, so talk to me now a little bit about how your approach has evolved over time, because obviously going through the prop firm, you have your basic experience. Then you get out, you decide to trade for yourself. Walk me through that point specifically when you started trading for yourself and how your approach to markets has evolved from there, from that point till now.
sure. So when I started off, it was much more at the point just focusing on one specific strategy rather than looking on a more holistic view. So back then, I tried to just one strategy all the time, and that had its limitations because the strategies don't work under all different conditions, right? So there'll be times whereby it doesn't do well. So right now, I have positions whereby different positions will do well under different market conditions. So if the market tends to go all the way up, that's where I would say like what I call positive delta strategies. They tend to do well as the market goes up. Then I do put on some strategies where it's more neutral, whereby if the market just goes sideways, then that's where the positions will do well. And then slightly semi-bearish strategies, like for example, the put broken wing butterfly, put ratio spreads. Uh, if you shift the 10 much lower, so this is where if the market does take a dip, at least it can have a opportunity to get into the zone, the profit zone. So right now it's much more where I try to have positions to kind of cover where the market could go rather than just one singular strategy.
Got it. And how many positions do you typically have on in your book at a given point in time?
Or can be quite a bit. So is this you're talking about the whole portfolio as a whole, everything?
Yep.
Or it can be about 30 to 50, depending on how volatile it is.
Oh, okay.
The bulk
Got
of
it.
it, the most position would generally be the income side, right?
Got it. The next question after that is, how old are you now?
Sorry?
How
How
old are
old?
you?
42.
So the next question, which is what I imagine based on your time frame starting, is how the fuck have you managed to reverse age? Because I'm 33 and you literally look 10 years younger than me, which is complete bullshit.
I guess I have no idea for that, but maybe good genes. And maybe Asians kind of look, I don't know,
Yeah,
maybe I
it's
kind of look maybe younger than
yeah, we could
what I
call
should.
a spade, man. Like white dudes, we age the worst. We have the genetics that make us look 60 by the time we're 35. I'm close to it. So I was just curious because I feel like I'm talking to a fucking immortal dude. It was freaking me out a little bit. Um, the next question, though, with respect to the portfolio, is what kind of time frames do you like to trade
Time frames in what sense? You mean
for
the chart
DTEs for your
or?
positions?
Okay. Yeah, so for the DTs, it's different for the wheel, the leap, and the income sort of strategies. So for the income style of strategies, like I mentioned, it's according to the Tasty Trades mechanic, right? So they did a study where they show that the expected move has an edge over the realized move is oftentimes lesser than the expected move if you go for around 45 days and above. So usually that's the time frame I stick to for the income style strategy. Now for the leaps, this will be I will go much further out, right? So this would be over a year in terms
Yeah.
of DTE. Yeah, and for the wheel strategy, this will be slightly shorter time frame. So I could go for something like maybe a week to a week, that kind of time frame, because I actually do want to get a sign on the positions, right? Because sometimes the market could come down, touch your cash output, and then it just shoots all the way back up, doesn't come back down. Then in that case, if you actually had just gotten filled, you would have done better in capital gains term rather than just get that premium. So I tend to go for a shorter time frame for the wheel strategy.
Yeah, I totally see that. And for something like the wheel strategy, I imagine you're probably a little more aggressive on your short put deltas to increase probability of assignment.
Correct.
Yeah.
Correct. Because
Which,
I do have many levels. Yeah. So I tend to have a higher deltas, right? At times could even
yeah.
be at the money.
Well, yeah, and the reason why I ask that is again because there's so many people that I talk to that trade the wheel, and I feel like so many of them fuck it up terribly because they want to sell puts at like 30 deltas, 20 deltas, something that obviously is a high probability of winning, but then they don't get the underlying, and then that exact scenario happens that you're talking about, where they're bullish, holding something with defined profit, watching the thing they're bullish in just go to the moon, and they're just like, wow, that looks cool. I'm going to take my $1 that I collected and go screw myself because that's about what I get here. When you think about the way that you manage your portfolio, you were talking about your deltas. So it sounds like you're using like beta weighted deltas to some capacity. And then it sounds like you're using some different strategies. You're using some different time frames. Do you have any sort of portfolio level mandate with respect to risk? So, kind of like your time at the prop firm, if your total portfolio exceeds a certain percent
Yeah.
drawdown, you do something about it.
So I don't really look too much in terms of drawdown but rather I manage it upfront through the maximum usage of the capital allocation. So that means I try not to go past 50%. So if I do not have more than 50% invested at any one time, then I know that the drawdown can be kept within that. And also like some of the management of the strategies, I tend to exit at 21 DTE if that's the longest, if it's a loss. So this way, the loss also kind of get reduced to what it could be if you hold on too much longer. So the Tasty Trade guys also, I lean a lot on their studies, right? Because you can see the statistics back decades, and they did many pieces on 21 DTE, whereby if you manage it at that point, then the chances of you actually losing the actual buying power that you put on for the trade has been reduced a lot, especially if you trade the indices as opposed to individual stocks. So in that sense, that's how I kind of manage the risk on a portfolio level.
I see. Yeah. And then just a couple other questions. When you're trading these different strategies, obviously you're probably looking at some different securities and stuff that you like to trade. But what do you tend towards? You were talking about larger cap or even mega cap style stocks. But yeah, what are some of the things that you like to put positions on in?
Yeah, like right now I have Google, Meta, Adobe, Amazon, and I do have some smaller speculative positions in Palantir. But
Got it.
yeah,
So you like kind of the tech side right now, it seems.
yeah, yeah.
And then do you spend any time playing with other sectors like when they're in favor, or do you kind of stick to that same book of products that you like?
I tend to stick to
Okay.
these products that I like. Yeah, because for
Right.
me, uh, I can't really go towards dividend stocks in a sense because they are taxed at the maximum rate for me as outside of US. So it doesn't really make sense for me to go more for like dividend stocks, kind of for the wheel. So I go for stocks where they don't actually pay a dividend, right? Although
I
Google
see.
recently just did, yeah. But so this way, in terms of the movement, at least the tech side would not have the dividend to kind of like soften the kind of the return. Yeah.
I see. Yeah, man. Dude, absolutely awesome. Well, I got to say, thank you for hopping on. It's been really, really neat having a chance to learn a little bit about your background. The way I typically find people for the podcast is like different people from my community. They'll be like, hey, can you go talk to this person? So obviously somebody wanted to learn a little bit more about you. And I'm I'm honestly really enjoying learning a little bit about the way you think about markets and stuff. There's a lot of parallels, which is kind of fun. So definitely would love to, have another conversation at some point. But in the meantime, for people that want to get a hold of you, where would you like them to go? And then I can throw those links also in the notes below.
Sure. Just to my YouTube channel
Yeah.
or to optionswithdavis.com.
Got it. Easy then. Yeah, man. I definitely would love to keep in touch, and then maybe we can even do like a live stream or something sometime. I think that would be a lot of fun. I love interacting with the community's live, so that would be a blast. But thanks for hanging out, man. Great to meet you, and great to have you on.
Thank you, Eric. It's a pleasure. Thanks for having me. Bye bye.